Okay. As I've indicated, the class will be recorded and the recording will be shared with you after the class in my UNISA within 2 days in YouTube channel and also tonight or tomorrow morning in the Teams class. My name is Mrs. Clara Msiza, one of your lecturers for FAC 1502, and I'm not alone. I am with Mr. Mkhokone, our lecturer as well for FAC 1502. So welcome to our class. This is a facet class, if you don't know, but it's the same as the other classes. We are continuing with our study units. The purpose of this lecture, which is a class, is to go through study unit 6. With study unit 6, we will look at adjustments and when do we perform adjustments? Why do we perform adjustments? Types of trial balances that are prepared at year-end, types of year-end adjustment, plus exercises regarding year-end adjustment. So we'll do a bit of examples of the adjustments, entries, and different types of adjustments that you might need to learn and do for in preparation for assessment 2, 3, 4, 5, 6, or 7. Please note that study assessment 2 covers study unit 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So you need to master all the study units. So adjustments, and when do we perform adjustments? Adjustments are performed at the end of the financial period for the purposes of preparing financial statements. And what financial periods refers to? It refers to your 12 months period that a business selects as its financial year, meaning that every business has the opportunity or the right to to make their 12 months to be within any period. For instance, one person will say their year begins at 1st of March until 28th of February the following year. Some of the business will choose 1st of Jan as their beginning of their financial year and 31st of December as their end of the financial period. So every business has that opportunity to select the 12 months according to their preferences. Some can start 1st of June until 31st of July the following year. So every time you see in the scenario, just check what is the financial period of the business. So financial period doesn't mean January to December. Every company will decide when they want to start their financial year, as long as that period is equals to 12 months. Why? Okay. Why it is important to make adjustments? To ensure that all current financial periods accounts have correct balances before preparing financial accounts and financial statements. To ensure that all transactions, income or expenses that should have been recorded in the current financial period have been recorded. If no income has been received or no expense has been paid, the transaction should also be recorded in the financial statements. Recorded transactions, either income expenses not belonging to the current financial period, are subtracted from the expenses or income and classified as either an asset or a liability. There are 5 steps relating to adjustments, which are as follows, and this information is already in your study guide. First, you need to identify the accounts that must be adjusted. Determine how the accounts will be affected and what the balances of these accounts should be. Calculate the amounts involved in the adjustments. Record the necessary adjustment in the general journal or post the entries to the ledgers. Ensure that new balances of the accounts are now correct. There are three types of trial balances that are prepared. First, we have pre-adjustments. These are the trial balance before you consider any year-end adjustments. Therefore, you will have a second trial balance, which is post-adjustment, considering year-end adjustment. Then we have post-closing trial balance, which is after taking into account all the adjustments that are necessary for the year. Can you see the screen? I see we've got. Can you guys see the screen? Mr. Mkhokwane, can you see the screen?
Yes, I see the screen.
Is there anyone?
Maybe
Okay.
they must log out and
Yes,
log in again.
yes, because I see it might be also network issues. Sorry for that. And please note that we will share the recording with you guys. So now we've got types of year-end journals. For the purposes of this module, we have seven, and we have lastly eight, which will be discussed later, 7 adjustments that you need to master for passing the module. So first we have prepaid expenses. This is an adjustment, one of the examples where adjustments are required. This refers to expenses paid during the current financial period, which relates to a future financial period, and thus are classified as current assets. So what is prepaid expenses? Businesses have, okay, I'm just removing this. There's something on my screen. Businesses have paid, it's like when the business has paid the supplier before the service has been rendered. E.g., when you are paying your insurance, remember insurance, you pay it at the beginning of the month before you are covered. So you paid in before you can actually get the benefits of the insurance. So you paid in advance. But we will do examples on this. Then we also have accrued expenses, which refers to expenses incurred in the current financial period, but which are still unpaid at the end of the current financial period. And this will be recorded as a current liability. The third one, we have consumable inventory on hand. Please know that there's a difference between trade inventory that will be discussed on Friday. Here we're only going to discuss consumable inventory on hand, which refers to goods consumed in the normal business activity, such as your stationery, packaging material, cleaning material that are on hand at the end of the financial period. This includes your tissues. You might have bought a bulk of tissues for your bathrooms, for your toilets in the office. The remaining ones at the end of the financial year, it means you need to account for them as your stock, as your inventory on hand. Current asset. The fourth one, we've got income received in advance, which refers to income received during the current financial period, but relates to a future period. Income received in advance will be treated as a current liability because you have not yet rendered that service or delivered that goods to your customer. Therefore, we say you still owe your customer. Hence, we say your customer becomes, in this instance, your liability, because if that customer doesn't claim the service or you don't produce that service or goods that you have promised the client, you will need to pay them back their money because they paid you in advance. Accrued income refers to income earned in the current financial period, but which has not yet been received at the end of the current financial period. And you consider this as a current asset. For example, you might have offered a service or goods on credit to your customer, but you have not received any cash. Hence, you need to record this as an asset, meaning that you are raising a debtor, and this will be included under your trade and other receivables in the statement of financial position at year end. We also have credit losses, which is used to be called bad debts. This refers to debts to be written off as they are irrecoverable, and this will be treated as an expense. For example, these are debtors or people who have been owing you for a while, and there is some assumption or some proof or that they might never repay you. For instance, the company might have been liquidated, or the company is facing financial problems, or you can't even find your data where they are located anymore after a certain period. Therefore, because they have been sitting as your trade debtors, therefore you need to remove them. However, when they pay you back, you can change and do a reverse account to claim that amount that they've paid you. We also have depreciation, which is the non-cash item, which refers to systematic allocation of cost of tangible or physical asset over its useful life, and this will be treated as an expense. Depreciation is also used as a term that is used when an asset that you own loses value over time due to deterioration or a normal wear and tear. Lastly, we have allowance for settlement discount granted. This refers to expected settlement discount to be granted in the next financial period for credit sales that took place in the current financial year, and it will reduce your trade and other receivables. However, we're not going to discuss this for the purpose of this class. You can find more details, and to gain understanding, you can go to study unit 9.7. So we will start with the examples. So with show of typing on the chat, what do you think this will look like? What type of a adjustment entry this looks like? Is this your prepaid expense or your accrued expense, income and expense? What do you make out of this picture? You can type there. So for example, when you see this picture, what comes first into your mind? Okay, thank you. This is your prepaid expense. So I've used that because every time when you see an accident, you get involved in an accident. If you are alive, the first thing you think, oh, will my insurance pay? Did I actually pay my insurance already? Because remember, if for that month or 3 months you haven't paid your insurance, you cannot claim for the accidents. Hence, we say that's why the policy of the insurance companies is to ask you to pay by the first of every month your insurance. Otherwise, you are not covered. So, for example, we will do an example here. And I will require you to participate because I'm not going to speak alone. And after this example, I will also open up your mics for you to ask questions. On 2nd January 20.1, other dealers paid a new annual insurance premium for 2,400. Current financial year ends on 28 February 20.1. First, we will have 6 questions required that we're going to go through. And please note, this is very important in preparation of your assessment too. As soon as we are done with this, please go back to your study unit 6 and do the example again and master this, because it might catch up with you. There are 6 required that we'll look at. First, as I've indicated, you need to identify your financial year period of this business. For example, when do you think is the beginning of the financial year period for this company that dealers? You can type there. What is their financial, when is their financial year beginning and ending? Meaning, when is their 12 months period within this company? We have already given you their year end, meaning you need to identify what is the beginning of the financial year period. Because if you can't identify it now, meaning that you will struggle doing this assessment, answering these questions. Happy? So I see someone say 1st of March 2022. So are you saying the year begin after the year end? Because their year end is 28 February 20.1, which means it starts, their financial year start from 1st of March 20.0 to the following period, which is 28 March 20.1. Thank you for those who have indicated. And then those who have indicated that is 2 Jan, unfortunately, is not correct. They only made the payment on 1 January 20.1. Because if you calculate from January to February 20.1, is how many months? It's just almost 2 months. So it's not their year end. So their year end start 1st March 20.0 until 28 Feb 20.1. So indicate, so we will do our first question because we have already identified their financial period. So now we know where we are working from. And also when you look at this, you must start thinking, does the 2,400, is it for the 12 months or did they pay for Jan, Feb, and the other financial year? Is it, you need to start thinking, okay, for this current financial year, which months falls within this current financial period? Looking at it will be your Jan and Feb. Because when you start 1st March 20.2, is the new financial period. March 20.1 will be the new financial period. So now let's attempt this. On to Jan. You can read and let's attempt. So now this will be required to record this under our subsidiary journals. Remember, we have our subsidiary journals, which are cash payment journal, cash receipts journal, general journal, sales returns journal, sales journal, purchases return journal, purchases journals, if you can recall from the previous class. So looking at this, where do you think we need to record this in? Are we recording this under CPJ or CRJ, general journal, or where? Thank you. Remember, anything that has to do with cash is either you record it under cash receipts journal or cash payment journal. Therefore, now, who is paying? We are the ones paying the insurance premiums, meaning that we are going to record this under cash payment journal. So this is how the transaction will look like. You're going to have your day, which is your date, your insurance name, the bank you're going to pay out 2.4, and this will be recorded under sundry accounts because we don't have a column for insurance premium. We're only going to put it in the bank. Happy? Then now we look at another question that we have with the same information that we had. Now you are required to indicate which account to be debited and credited on the day of the transaction took place. So kindly indicate here on the chat, what are we going to debit in the day of sale of the transaction, which is the 2nd of Jan 20.1. What are we going to debit? What are we going to credit? So why are we debiting the bank? I see some of you say debiting the bank, but the company is the one that is paying out the insurance, meaning that we are paying our supplier, which is the insurance company, and the money is going out of our bank. Remember, the amount is going out. So meaning our bank is decreasing. So because bank is an asset, it increases on the debit side and decreases on the credit side. Happy? If you don't understand, please kindly type on the chat, then I will open up your mic. If you don't understand why we have credited the bank and debited insurance, which is an expense. Then let's do the third example with the same information. Does the amount paid only relates to current financial period? Yes or no? If you have said yes, can you type Y? And if you have said no, why? And I hope you guys are not cheating, opening your study guides, because remember, in the assessment, I will change the question. It won't be the same. It will be the same, but it won't look the same. So yes, this will not relate only for the current financial period, because when you divide this by 12, it gives you 200. And remember, if you are doing your timelines, your financial year starts in 1st of March and ends 28th of Feb. However, you paid in Jan, meaning that if you can see, current financial year start 1 March 20.0 and it ends February 20.1. Next financial period will start 1st March 20.1 and it's going to end 28 Feb 20.1. And please know that you didn't pay, your financial year is not Jan to December. Your financial year is 1st of March to end of Feb. Azelia, please take note of that. So the reason we say this is an adjustment entry is because the money that you have received does not relate to only the current financial year. It also relates for future financial period, which is the next financial period. Hence, we need to adjust for this financial year to say this money we're paying for the expenses that were incurred for this month with his insurance for the 2 months. However, we have paid in advance for the next financial year for the next 10 months. Because when you divide, because the information said you paid newly insurance premium of 2.4. So meaning that you need to look at, if you have paid in advance for the whole year, you divide that amount with your 12, then it takes you to say, every month, this is how much you have paid. And this, how much relates for the current financial period and what relates to the next financial period. But this one is cheating. So now, I think this has cheated me. But however, this is fine. We have discussed. We have shown you that there's 2 months. Hence, we have 200 multiplied by 2 for Jan and Feb. And this is how the timelines looks like that you need to do. Make sure that you learn. You can have your paper and pen when you do the assessment and your calculator to draw your timelines, especially when you've got information. Then the information will already tell you if there's an adjustment that needs to be made for the current period. So if you are doing your timelines properly, you will see if there's a prepayment, accrued income or accrued expense, and whatever you are dealing with. So it will make your life easy. So now we have our required E. So prepare the adjusting journal entry at the end of the financial period. So meaning, tell us what you're going to debit and what you're going to credit at the end of the financial period as an adjustment entry. Remember, we are adjusting here. So I need your adjustment journal to be indicated here. So remember, at the beginning, we have shown what happens on the day of the transaction. You have already debited your bank, and you have credited your bank, you have debited your insurance with 2.4. But however, now we are adjusting because we know that the only 400 relates to the current financial year, meaning that whatever doesn't relates to this current financial year, we need to adjust for it. So you can attempt here and indicate what you're going to debit and credit and with how much. Remember, we are adjusting this journal because this does not relate to the current financial year, all of it. So we need to separate the amounts. And then we're not going to touch our bank because our bank, the money is already in our bank. However, insurance expense does not relate for the whole financial period. And it will make your profit look less because you'll be claiming 2.4 as if you have actually incurred this expense. The reason we are doing the adjustments is that you must think about what happens if you cancel your insurance before you have had your 12 months, meaning that you might get your money back depending on the policy or the rules of the insurance company. So those who are giving answers, I hope you are not cheating. Because when I put on the assessment, we will use the same example but change it around. So you need to master this because accounting is not difficult. Once you master the basics, it doesn't matter what I change here. I change financial year, the amounts, the names, you will get it correct. So adjusting journal entry means that we are adjusting whatever doesn't belong to this current financial period. We need to disclose it as such. As I said, you don't touch your bank. However, your insurance is misleading Because remember, your insurance becomes an expense, and to get your profit, you'll do your income minus your expenses that are relevant to that financial period. So meaning that the 2.4 that we did, we have overstated our expenses. Hence, we need to reduce the insurance expense and move it as an asset for the next financial period because it doesn't belong here. So meaning that you still have money that the insurance company is owing you, but not actually might not pay it back if you don't cancel your insurance. Hence, we need to do this adjustment. Happy? So let's do our next. This is closing transfer entry. Here, we almost doing the last one. We are doing closing transfer entry now. For what? For the remaining amount. So we need to close our account, our insurance account. And this is done as follows. So indicate here, okay, I see someone is already has given us the answer. And I don't know, anyone who wants to attempt how we're going to do our closing transfer journal entry for the year? Thank you, Nobutula. Without wasting time, remember, we are closing now our accounts. Hence, what goes to profit and loss, it will be the 400, and our insurance expense will be 400. This is the correct amounts that should be reflected when you calculate your profit and loss account. Then let's attempt our T accounts. We will have, what T accounts are we going to have? We'll have 2 T accounts that I would like you to attempt. First, let's attempt your insurance expense T account. How will it look like? We have the amounts already. What are we going to debit and what are we going to credit in your T account? We are doing the general ledger account for insurance and prepaid expenses. So there are only 2. So when I look at your insurance ledger, general ledger expense, how are you going to record this transaction? Anyone who wants to attempt? You debit bank, you credit expenses and profit and loss account. You debit the CPJ transaction and amount. What is the CPJ transaction? Can you type this in there? Can you see? This will look how your T accounts will look like. The 400 will be the balancing which goes to your profit and loss account. Your bank doesn't change. However, your profit and loss will be shown, your prepaid expense. And how will your prepaid expenses look like? So what are we going to debit and credit? Your prepaid expense. What amount, if you can recall, you have put as a prepaid expense? Remember, the total were 2.4. but the other 400 relates to the current year, and the 2,000 is our prepaid expense. Thank you. We are in the same. So we are now going to go to our financial statements. So we'll start with your profit or loss and other comprehensive income. So how are you going to name, which account are you going to name? Yes, we know it's an expense. What is the name of the expense and how much we're going to record under your statement of profit and loss? We are in our statement of profit or loss and other comprehensive income for the year end. So what amount are we going to post there? Are we going to post the whole 2.4 or are we going to post the 400 or the 2,000? Because remember, already we have done your general journal, which gave you what goes to what account. So meaning here is a free mark that you are getting. You're going to only post 400 because if you post 2,000, here you will be overstating your expenses for the current financial period because you haven't consumed the savings of the insurance company. You know, it's like you are covered for future things and you want to claim now. We will claim it in the next financial period. For now, on our profit or loss account, which is statement of other comprehensive income, we're going to only have an expense, insurance expense of 400. Now let's go to statement of financial positions for the year ended 28 February 20.1. So are we going to have an asset or a liability? And what is this amount going to be? How much is the amount and what will it be? So if you have to put this in your statement of financial position, are you going to put it under your liabilities or your assets? And then if you put it under liability, what is the name of that account? If it's an asset, are you putting under trade and other receivables? Or if it's or you're going to have it as a new item, line item alone separately? Or if it's a current liability, are you going to put it as its own line item, or are you going to include it under trade and other receivables? So we do agree that this is an asset. And it will be your 2,000, which is balancing our financial statements. Because now we have all the 2.4 is already here on your financial statement. And this current asset is not going to be included as your trade and other payables. It will be a new line item called prepaid expenses. So now let's move to our next. Before we move, do we have any questions? Can I see with hands? If you've got any question that you want to ask before I move on to the next example. Okay, let me open the mics. I see 2 hands. Okay. So let's take the first question. You can unmute yourself, Lengiwe.
Good evening, ma'am. Can you please repeat the prepaid expense T account for me?
Is it the prepaid? Can you see the screen?
Yes.
So you said, what is confusing you here?
No, I didn't understand why we wrote the 2,000. Do we take it from the insurance expense T account and post it the way it is. We
Yes.
don't have an opening balance.
Yes. We don't have an opening balance. You take it as it is. And you see if you get the insurance expense T account, there's no way you can miss this. You're just moving it. Already you have told yourself, this side you have credited, the contra account you debit. Meaning that whatever insurance expense becomes your debit account. Then you use the same amount. Are you happy?
Yes, ma'am.
Thank you. Okay. Thank you. I see there's no more questions, so I will close the mics and let's do the next example. So now I have a picture here, and please tell me what do you see here? What comes in your mind related to accounting? So when you see this picture, what these two pictures combine, what are you making out of this? Still waiting for some of you to give me what to see. Don't ask me what is it. And then if you say accrued expense, you must be explaining what is this? I mean, it's not, I'm seeing, facts. I'm seeing cables. I don't know if someone is seeing water. I see some money and a grater, you know. And now when you look at this, we take it into accounting to say, what is this? Thank you. Very interesting. So now we are looking at our accrued expense. And on this, we're looking at the water and electricity, the money we spend on that. And our example is as such. Remember, accrued expense. Sorry for that. I had a visitor. I just had a visitor here. I had to ask him that mommy's working, So now we are looking at accrued expenses. As you might remember, accrued expenses refers to expenses that have been incurred in the current financial period, but which are still unpaid at the end of the current financial period. And this will be recorded as a current liability. So we will do this example for you to get an understanding how we treat accrued expense. So this is our scenario. We have our information here on 28 Feb 20.1, the end of its financial year. So they've given us financial year 20.1. Tata Dealers water and electricity account shows expenses of 2,880. Closer examination. Tata Dealers accountant established, she said, February water and electricity account of 360 has been taken into account. So we know that in our country, there's different types of how you pay for your electricity. Some we've got prepaid where you buy the units. However, some they still wait for the end of the year month to get their bill, their invoice for the month. So please know that for this one, the people have paid, they've received their invoice plus account, which shows the 2,880. And they realized that for February water and electricity account of 360 has been taken into account. So we will do first required, which account will be debited and credited for water and electricity that has not been taken into account for month of February 20.1. So remember, it has not been taken into account. So what are we going to debit or credit to fix this? We are doing an adjustment. Yes, has not been taken into account. And then if you are debiting water, what are you crediting? Let's remember the definition of accrued expense. So already we know what an accrued expense is. Refers to expenses that have been incurred in the current financial period, but which are still unpaid at the end of the current period. So is our expenses, we as a business, we have incurred this, but we have not paid at the end of the current financial period. Too fast. So you guys are correct. We'll debit this because the 360, we need to fix it. We are not looking at the 2,880, which is our invoice that we have received, because now we need to fix the issue of the 360. Remember, it relates to our current financial period. Remember, our financial period start 1st March 20.1, meaning that 28 February 20.1 is the financial period that is ending. So we are already paid, meaning that 360 was for the current financial period that we are looking at, and the balance relates to the new financial period. So I see my T account is going. So I don't want my T accounts for you guys if, okay. We have done this, and this will be our T account. Unfortunately, it went on, all of it. This is how your T accounts for water and electricity and accrued expense will look like. Remember, the 360 is an accrued expense. We have consumed the service. And the rest we are paying is for the next financial period. Happy? Oh, it's not flying in. Let me do. Okay. So now let's see and let's attempt. I already shown you how our water and electricity will look like. Because the 360 and this accrued expense, this is how it's going to look like. Happy? Now we're going to look at consumable inventory on hand. So I see a hand. Okay. So someone needs to assist our fellow student here. Moko, patient says, why is there 2,880 balance brought down? Because it was already have been paid. So anyone who wants to attempt to respond to Moko, to patients, you can raise your hand. Let me open the mic. So Farah, you can respond.
My understanding here, we are saying it's an accrued expense. So it means it's not yet paid.
Hence,
So,
we don't have a bank here.
Yes, yeah. So hence, that's why we have to treat it this way.
Another one, I see Nomzamo also wants to attempt responding to our fellow student.
Hi, no, sorry, I was not responding. Actually, I have a question.
Okay. Let's hear.
Okay, I wanted to find out this 2,808, which period does it relate to? Does it relate to period from 1st March 20.0 to 28 February 20.1? So why there's a split between this? If it relates to the same period, why is it split at 280 plus 360 if it covers the same period?
This 360 has not been taken into account, meaning it was not included in the 2,808. Do you understand that part?
Okay, was this amount paid, 2,808, was it paid already?
No, they received the bill, the account.
Okay.
They received the account. So there's no bank on the scenario here.
Oh.
Are you
So
happy?
okay, and then it's for period from 1st March 20.0 to 28 February 20.1. Am I correct to say that? Okay.
Yes. Meaning that we need to include this in our profit and loss as an expense for that financial period.
Okay.
Hence, now our expenses were underestimated and our profit was overstated.
Okay.
So,
Patients, are you happy? Okay, thank you. I will close the mics. So let's now look at consumable inventory on hand. As we have indicated, it refers to goods that are consumed in the normal business activities, such as stationery, your packaging material, your cleaning material, that are on hand at the end of the financial period. Consumable inventory on hand is a current asset because you have it. So you have bought these tissues, meaning that you still have them, you haven't used them for the current period. It's like your stock, but this one is not in the production of income, is an expense. So it doesn't go to your cost of sales. It goes under your expenses because you are not dealing with, or you are not in the business of selling stationery or packaging material or cleaning material. Hence, we say it's consumable inventory on hand and not in trade inventory. So now we have the scenario here that we need to work on. On 28 Feb 20.1, the end of its financial year, we are still with Kaka dealers here. Stationary account shows that stationery to the value of 500 was purchased during the year. The physical stock count, it is determined that stationery worth of 150 is still on hand. So meaning that you bought for 500 and you didn't finish everything, and the value of the stationery that is left is valued at 150. Therefore, which account will be debited, credited to the consumable inventory on hand? Remember here, we have already done this for the year. We have bought the stationery, is already in your business, they're sitting in your storeroom, and we need to account for it. Because now, if you say you have used everything, then you are overstating, because some of this expense that you have incurred, you didn't use everything that is valued at 500, meaning that you need to adjust your account. So now, what are we going to debit or credit for consumable inventory on hand? Can you type on the chat? So in 20.8, okay. We have already said, when you see consumable on hand, you know that you've got something left, which means is your asset. And now we've got an expense that was overstated that we need to fix. So remember, expense increases on a debit side and decreases on your credit side. Hence, now we are decreasing our expenses because they were overstated. Are you happy? Can I see with hands before I move on? Expenses increases on a debit side and decreases on the credit side. Asset increases on the debit side and decreases on the credit side. Hence, we have the 150 here, meaning that 500 minus subtracting 150 is what we have used in the current financial period. Not doing. So now, can we attempt to do the T account? So we'll have two T accounts now. Which one? It will be your stationery and consumable inventory on hand. So what are we going to, under stationery expenses, what are we going to debit and what are we going to credit for 20.1, February 28? So we are closing now. We are looking at balancing our figures. What will go to your profit and loss account? Remember, you balance it with your profit and loss account. So these are your T accounts that you need to master. Remember, the 150 is still on hand and is your asset. So you need to do the T account for it. You are opening a new account, and your stationery you have opening and balance brought down and you're closing. Hence, it has balance at the end. So now, in your financial statements, what are you going to put under your profit and loss account, and what is it called? We're all aware that this is an expense. We agree, but what is the correct amount that needs to reflect there? Is it 500? Is it the 150? Or is it the 350? Remember, the T account is given already here. And we've got your profit or loss account is the same as your statement of, it is an amount that is going to your statement of profit or loss and other comprehensive income. Then we also have your statement of financial position. Where are we going to put the other amount? Remember, basic account equation. What you do on the left, you do it on the right. Asset equals to liabilities and your equity. So we need to balance. So what goes to your statement of financial position? So you will have your liability or your asset is the consumable. Inventory on hand becomes what? We said is an asset. And if it's an asset, it will be your current asset because we're expecting to consume this within 12 months. And then the amount that we're going to put here is the amount of the goods that we haven't consumed, meaning they are on hand. This is how your financial statement will look like. So, any questions? I see there's only one hand. Let me open the mics. Oh, the hand is gone, so I will continue. So now, type anything that comes into your mind when you see this. You have money on the other hand, you've got time, you've got a watch. So what comes into your mind when you see this picture? Time is money, like it. Depreciation, time equals to money. Salary wages for hours worked. Income, time is money. Investment. I like it to see, what you see. We all have different views of the same picture. Some see money, some see time, some see income received in advance. It's because they are balancing, which I just think journals we haven't done. So we are now moving into income received in advance. And we have a scenario here. We still have data dealers. And where we're looking at, before I do this, let's recap. What is income received in advance? What do you understand about this? Can any of you attempt here? What do you remember? What is income received in advance? So it refers to income received during the current financial period, but relates to a future financial period. Yes, it will be a current liability. You understand? It will be a current liability because your customer paid into your bank account for services or goods that you have not delivered to them. So let's see what is happening on the scenario. On 28 February 20.1, the end of its financial year, Utaka dealers rental income account shows that 10,400 was received. Utaka dealers rents out a part of its building for 800 a month. On closer investigation, it is established that the rental for Jan 20.1 has already been paid. So our first question, you see, people have already calculated. So we've got, already when you see this, what's your timeline here? You ask yourself, immediately when you see March 20.1 is after your year. So now let's say, calculate the number of months the rent was paid for. So you already had given me, this is how you get your 13 months. As we have indicated before, this is how your current and next financial year looks like. And this is how they calculated. Every month is 800. So now we need to adjust for this March, hence it's rate, because it doesn't relate to this current year. It's for the next financial year. So now, if we said 800, we include it in this profit and loss, it means we will be overstating our income because this we haven't provided the services for. The person has instead, used this building for this current financial year. So it relates to the new financial period. So which accounts will be debited and credited for the rent income that does not belong in the current financial year end 28 Feb 20.1. So let's see, what are we going to debit? What are we going to credit? And you must always remember, revenue income increases on the credit side and decreases on the debit side. Why are you touching the bank? Hamza? We are not saying the transaction on the date, on the 28th February. What we want you to show us is the accounts that will be debited or credited for the rent income that does not belong in the current financial year. So meaning that we are not looking at the transaction on the date of the transaction. Hence, we're not expecting to see the bank. Remember the 800 out of that 10,000 doesn't belong to this current financial year. Hence, you must read does not belong. So we're looking for the amount that does not belong. And we had already calculated that the 800 here is for March 20.1. So meaning it's outside the 28 Feb 20.1. So therefore, remember, our rental income is the money that we receive. So meaning we have to reduce it, hence we debit. And we're going to credit income received in advance, which is a liability. Remember, we haven't provided the services yet. So only in the next financial year, we'll say we had a tenant for March this month. What if the building, something happens, the building, you sell the building before March? It means you owe your tenant the 800 that they paid in advance. If your building has to be burned, meaning that there's nothing for your data to be used, meaning you need to give back that 800 to say, you know what, unfortunately, we can't use part of my building anymore. There's no building to use. Hence, we say it is received in advance and is a liability for you at the moment. However, when you go to the next financial year, then it will relate to that financial year then. But for now, is your liability. I've got one hand. Sorry for that. So I have a hand here. Let me open the mic. Nombulelo, you can speak. The mic is ready.
Oh, sorry, that's a mistake hand.
No problem, thank you. Let me close the mics before we have a choir. So, general ledger account. Still looking at this. Rent income received in advance. So we are looking at your general ledger, it's like your T account. And then we will have your rent income. How will it look like? And how will your income received in advance T account look like? So let's start with rent income. What are we going to debit and what are we going to credit? You can type on the chat. So we are in the rent income here on the 28 Feb 20.1. What are you going to debit, credit, and what is going to go to profit or loss account? Remember, we balance our expense with what goes to the profit or loss account. And remember, our adjusting account, it doesn't have an opening. And that amount will go to our statement of financial position. And the other one, the balancing figure, will go to your statement of profit and loss and other comprehensive income. We know that we had the 10,400. And already we know from 10,400, the 800 must be removed. It cannot be in the current financial year, meaning that it must be removed from our statement of profit and loss and other comprehensive income. So we're removing that income. So this is how it will look like. Thank you. Then now we need to have our adjustment entry, which is income received in advance. Remember, we said is a liability, and a liability increases on the credit side. And we said profit and loss is an expense. So this 9,600 will go to your profit and loss and other comprehensive income. So you can disclose this. I know we have mastered this by now. I'm not gonna dwell much on it for the sake of time. So this is how it will look. Income received in advance, 800 will be your current liability. Your rent income will reduce the 800 because we only 9,600 relates to this current financial period. Yes, we will share the slides. So let's move to the next one. Post on the chat, what do you see there? What do you think? Not yet. Thank you. We are correct. We are dealing now with accrued income. As I've indicated before, accrued income refers to income that has been earned in the current financial period, but which has not yet been received at the end of the current financial period. And it will be your asset. So when we say has already been earned, you have already provided the service or already given your client the goods and they haven't paid you. So meaning that we're supposed to have this in your bank account, but no one has paid. So we're gonna look at Ukaka again. On 28 Feb 20.1, the end of its financial year, Tata Dealers Commission income account shows an income of 2,200. On closer examination, it is established that an amount of 200 earned in commission has not yet been received. So this will be fast. Which account will be debited and credited for the commission income that has not yet been received? Now we go, what are we going to debit and credit? Remember, commission income is an income. It decreases on a credit. It decreases on a debit. It decreases on a debit, increase on a credit. Accrued income is an asset, increases on a debit, decreases on a credit. Yes, thank you. Prepare the closing transfer journal entry for the year. Oh, look, I already gave you the answer. Is your 2 point 4. Remember? And this is how we got it. Then this will be your T account. The reason why this, remember the scenario. On 20.28 February 20.1, the end of the financial year, Gaga commission income account shows an income of 2.2. However, it was established that an amount of 200 and in commission has not yet been received, meaning that it is due to the company and it was not included. Hence, it means your income has been understated. That's why we credit the commission. And like the other ones, we will have to disclose an amount in your statement of profit and loss and other comprehensive income for the year ended 28.4. Then we'll have your asset, as I've indicated, because it's your data owing you. Therefore, you will have to disclose an amount as such. Any question on this before we move to credit losses? Any questions before I move on? So it means we are all on the same page. So now let's look at credit losses. Is your bad debts, people that you might not get money from. You know that person owing the company that disappeared. When you go look at their address, is not there, or they are liquidated, or having some financial problems. So we need to look at that now, see how we're going to adjust. On 22 Jan 20.1, Gaga dealers received a notification that a debtor, a tango, is insolvent, meaning this person will not afford. On closer investigation, it is established that the debtor still owes Gaga dealers 230. So you guys are not gonna receive it. The company will never get this money back. Remember before you had raised your debtor as an asset, hoping that you will get this money. And you had already in your income statement have included this amount before to say, you know what, I sold this to a tango, and this amount was already as part of your profit. But now we know this money you're not gonna get, meaning that when you provided them with the service or goods, that time you have overstated your income and tax, some says tax due on this 230. But you're not going to get it, meaning that you need to also go back and say, you know what, I had already overstated my income there with the 230. And remember, when you're going to do tax in your next modules, you will also go back to SARS, say, this person is owing me, is insolvent, and I already paid the tax on the 230. Can I get my refund when you're doing your next modules? So now which account will be debited and credited for the credit loss for the year ended 28 Feb 20.1? And how much? This is straightforward. Yeah, but this is your credit loss is an expense, increases on your debit side, and your asset decreases on the credit side. Then your T accounts. This is how your T account will look like. This is something. Okay, it is fine. So this is easy. Then in your financial statement, You'll have your 230 as your credit losses, meaning it reduces your income and your profit. Then you'll have your trade and other receivables will also decrease with 230. XXX is just enough. We are just putting it in terms of, it means that if you had debtors of 10,000, you're going to reduce it with 230. Then let's do the last one. What do you see on the picture? What do you see in the picture? So are you balancing the figures to say we didn't do depreciation? Or you know that there's a difference between a new car and a used car. A used car, it depreciates. So you guys are correct. A new car is still new, hasn't been used. So these two cars will not, they might be the same model, but will never price the same. And we need to adjust for that. So we have Tata dealers who bought machinery for the value of 80,000 during the year. On 28 Feb 20.1, the end of its financial year, an amount of 12,000 has to be written off as depreciation. So meaning it was not done. Which account will be debited and credited for depreciation for the year ended 28 Feb 20.1? Which account will be debited? Can we see? Can we attempt this? We are almost done. We debit depreciation. Remember, depreciation is an expense. So it increases, an expense increases on it. The amount is given, and we've got accumulated depreciation, which is a contra asset, meaning that the value of your assets is going down with accumulated depreciation. Posting journals, what will be your T account? For depreciation expense, you will debit and credit. Okay, thank you. And then what is your contra account? Accumulated depreciation. And then how do you disclose this? We know this was 80,000. It was given, the machinery. You less the 12,000, then you've got your 68. Your expenses will increase with 12,000. Thank you. We are done for the day. Any questions before I close? Any question related to what we're discussing today? Otherwise, we're going to meet again on Friday. Anything you want me to go back to? Anyone who wants to respond to Mpile? I have been talking now. So now you guys, because we're listening and those who don't have questions will respond. Students. Can you hear me? So let's discuss. Where's the question? Can we get any volunteer to respond to Mpile? What is the difference between depreciation and accumulated depreciation, guys? Yes, let me see the name, Farah. You can.
Okay. Yeah, my understanding is that when you talk of accumulated depreciation, it's depreciation that we have been adding from the previous years to get to this year. And then when you talk of depreciation, depreciation is for this current year.
Are you happy, Umpile? Let's see. Umpila, are you happy? So since we are done with this list, discuss from study unit 1 until study unit 5. Do you have any questions related to that? Ladies, why are you feeling like you are learning Finnish? So we have a questions from patients. You can post. You can speak, patients. Patients. Okay, and Radebe. We still have 30 minutes, so we are here to respond to your questions.
Good afternoon, ma'am. Good evening. Can you hear me, ma'am? Hello?
Hi, how are you?
I'm fine, thank you.
Yes,
And
we
you?
can hear.
I wanted to ask whether adjustments like increment, will they be included since we haven't done any like this?
Mr. Kokon, you can take that.
Come again.
I wanted to ask whether adjustments like rent increment, where maybe rent was increased by a certain percentage during the year, will they be included in our assignments or what?
Oh, it's part of the adjustment.
Yes, it's part of the adjustment.
Oh, that maybe you are saying maybe rent increased during the year, maybe by 10%.
Yes.
Oh,
And
yeah.
that was not taken into account.
Yes.
Oh, but for now in our module, maybe the question like 10% increases during the year. Yeah, that one because it was not tested in our study unit 6. But remember, the principles is the same. If you understand the principles of accrued income, income received in advance, expense prepaid, it's just what will differ is the scenario. But the scenario will address the same principles we are doing now in class.
Okay, thank you.
So thank you.
And also remember something here, that like my colleague has said, the principle is the same. We might have there to say there was an adjustment. Then you need to look at what did you pay the rent in advance, or were you the one paying, or is you being cut up on this instances increase the rent before your clients have paid. So you need to decide if it's an accrued expense or accrued income or income received in advance or prepaid an expense. So the scenario will direct you. We may ask you a question like that to test your understanding. However, the principle will be the same. You will need to do your timeline, which is very important, and understand what is the position of the company here. Are we the one, for instance, for the rental? Are we the one renting out our property, or are we renting out someone's property? You understand? So you'll need to go back, look at that. Then it will tell you if what kind of an adjustment you need to do to adjust. If that money received in advance, and meaning that your debtor, who is your tenant, still owes you, they owe you that 10% because they paid before maybe they received, or they forgot to pay you the extra. Or if you are the company here, you have paid 10,000, and maybe the day after you forgot to add that 10%. And then after year end, they say, no, you still owe the 10%, you forgot, it increased during the middle of the month. Then you need to make that adjustment. So the most important is understanding. Doesn't matter how we trick you, how we change it. You look at your timelines, you look at the position of the business, depending with the supplier, with the tenant in that instant. Happy. Any question?
No, I'm fine. Thank you.
Hello.
Hello,
Hello.
yes, you can speak. You can speak.
I have a question regarding the credit losses and recovered. So if a data that we've already written off in our books, maybe let's say after 2 months comes back and then pay the amount that they owe us. So how do we record that in our books?
So now you need to ask yourself, the day that we had evidence now that A Tango is insolvent, what did you do? How did you record? For example, you had my credit losses is here. You had what? Debited your credit losses. And you had reduced your trade and other receivables. And now you need to change this transaction to be the opposite, meaning that you'll receive money in your bank account on the day. But now this data will have paid you that money, meaning that you'll have your credit losses will change. It means it will become an income, and your income will increase on a credit side.
Okay.
You understand? So you're
Yes,
doing the
ma'am.
opposite. So meaning that you'll have your credit losses recovered. That will be credited, and you'll debit your bank with 230. Because you, on the day of that transaction, you will receive this money. Remember, before we didn't get money into our bank, we raised a trade receivable, and we have closed this account because this person will remove them as our data. You get that money back into your account, meaning you increase your income and you increase also your asset. You understand?
Yes, ma'am.
Your
Thank
asset
you. Thank
bank. Okay, anyone?
So
Okay, you can speak.
I saying credit losses it's an expense and then credit losses recovered is an income.
Yes.
Oh, okay. Thank you, ma'am. I
Yeah,
understand.
remember, yeah. So meaning that you need to fix your profit and loss and put back that income that you had removed as an expense. And we know that your revenue or your income increases on a credit side. And then you
Yes, ma'am,
also
I know
get,
that.
yeah, and you got money into your bank account. So because you got money into your bank account, it means your asset is going up. You need to debit your asset.
Okay.
You're happy.
Yes, I understand, ma'am. Thank you.
And then, any question again? Before I start asking you guys questions.
There is a
Because we
question
need,
from the
okay.
chat. Okay, is someone speaking? Hello?
So during the, okay, this one, sorry. Yes. You can speak out, Martha, if you can, Lerato. So, ma'am, during the assessment, are we allowed to use calculators and notebooks to do time? Yes. You must have your calculator. You must have your notebook where you're going to write, draw your timelines. However, remember the assessment is not an open book. Because immediately when you open the book, it means you didn't study. And time, the 2 hours, if we give you 2 hours or 1 hour, will go by very fast. So before you even start with the assessment, you need to have your calculator because we are doing accounting. You need to have your clean paper notebook so that you can draw your timelines, so that you can put everything nicely there to be able to put your correct amounts in the quiz, in the assessment. And the assessment 2 will be in the same format as assessment 1. It might have MCQ, it will all be online the same. It might have true or false, embedded questions. We might require you to type in your numbers, to drag and drop, depending on what we want you to do. However, everything we've already showed you in your admin self-assessment. Nothing new will come. Assessment 2, it will be timed. For how long? You will see when we open the assessment. We decide. But however, we time you according to the total marks that are available for the assessment. So the time that we give you to complete 100 mark and 50 mark will not be the same. And also we look at how hard the assessment is and how much time we expect you as a student will be able to complete this assessment, how long it will take you. Can I send an inquiry related to assessment 1? As indicated in the announcement, you can post your questions to your e-tutor in your e-tutor site, and your e-tutor will be able to respond to you. And if you still don't understand, you are welcome to make an appointment with your e-tutor so that they can explain to you where you went wrong and why you went wrong. Unfortunately, we couldn't discuss it at the moment because we had unfortunate changes in the module where some students were just registered this week, and we cannot be unfair to those students. If the bad debts pay in the new financial year, do we go back and correct the old books or record in the, no, you record in the new financial year. It's not a prior period error, which is IS 8, which is not within the scope of this subject module. And how many attempts are we gonna get for assessment 2? 1. Remember, if you don't do well in assessment 2, or you miss it, or you want to improve your marks, you will have an opportunity to do assessment 5. So hence, we only give you one attempt. If during the attempt anything happens, don't panic. You know you're going to do assessment 5, and we will select the one with the highest mark to be included in your final mark. So if, let's say, you did well in assessment 2, you got 50, then on assessment 5, you get 40, we will take the 50 from assessment 2. If you got assessment 2, you got 50, assessment 5, you got 80, we will take the 80. It's optional. But if you feel like you don't want to attempt it, assessment 5, then it's fine. I want to see the Bongani, what's your question? Are we gonna be expected to write as you have just presented in some of the upcoming assessments? You will be expected to type in. Remember, it's an online assessment. It's not written assessment, meaning that we might require you to type in your accounts or select the correct account from the list of accounts we have given you. Let's say for this instance, on slide 40, we will give you, maybe say this is a statement of profit and loss and account. Then instead of saying commission, we will give you a drop-down menu, meaning that you have to press the drop-down menu. Maybe we will write commission income, we write rental income, we write many things so that we want to see if you know what is the name of this account that needs to be included in the expense. Then on the amount, which is 2,400, we will write nothing. You have to go in, type in 2,400. The same understatement of financial position. What we'll do, We will say maybe it's a current asset. We will say trade and other receivables, commission income, trade receivables alone, or we say data, or we say supplier trade and other receivables. You need to scroll and read and select the relevant one here to get a mark. Are you fine, Bongani? Bongani, are you happy? Thank you, Bongani. We've got a question from Nhlanhla. Let's see. Is there a strategy that you can share with us in order to identify different accounts debited, credited on a particular transaction? So who wants to attempt responding before I respond? Any of you students? I've been speaking. Yes, you can speak. The mic is open. I see there was someone's hand off gone. So every time you read a scenario, first you need to revise on your own time what account is debited or what account is credited. Meaning you need to know that if you're speaking of expenses, the expenses increase on a debit side and decrease on a credit side. Income increase on the credit side and decrease on the debit side. Assets increase on the debit side and decreases on the credit side. Liabilities increase on the credit side and decrease on the debit side. You need to go back, and we have shared the slides from the previous class, how these accounts are treated. And you need to also, again, look at your timelines. As soon as you look at your timelines, you look at the name of the account and identify it is either as an expense, income, a liability, or is an asset. You need to first identify that. Immediately after identify that you're dealing with an expense, you will remember that if we are increasing it, I will look at the debit side and decrease it on the credit side. So you'll just have to go back and revise that. So if you get the same mark on both assessment 2 and 5, we'll take any, the highest of the two, which will be the same. Umpile. On Friday, which study unit are we going to do? Mr. Mhlahlane?
Friday is study unit 7.
And what is that?
Revision exercise 2 under additional resources folder. There is under study unit 7, revision exercise 2.
Please make sure that you do it in advance so that when we come here, you are able to ask questions in terms of where you got stuck, where you need clarity. So, Matumelo, I don't know if you have been responded. Why is the insurance expense debited when it was already paid? Shouldn't it decreases as it was already paid? Don't the expenses decrease on a credit side? No, expenses decreases on a
Debit
side. Am I correct? I see someone was speaking. Anyone wants to explain to Matumelo? Matumelo, are you fine? Then study unit 7 revision exercise 2 and additional resources. Okay. Okay. Kandazile, you can speak. You can speak.
Hi, everyone. Can you hear me?
Yes.
Hi, everyone. My name is Tanda Zide. I'm one of the tutors. I just happened to be able to join the class today. I saw that one person asked about how they can, I think there was a previous question in terms of how to identify whether which one increases on which side. I've just posted on the chat a method that I used way back when I was still in high school that really assisted me to identify whether an asset is increasing on the debit side or decreasing on the credit side. So I've just posted it. I'm not sure if it's clear, where it shows you, it's called IOLI. So at the top, the first one is assets. The next one is your owner's equity type of accounts, liabilities, and then I is for income, and then E is for expenditure. So it sort of like helps you to understand as a basic to say, if it's an expenditure as an example, all expenditures increase on the debit side. So if you can capture this and then going forward, of course, the more you do it, you'll get used to it in terms of which side does it debit, which side does it credit. But I think if you can just capture it and understand it as a basic, you should be fine as you continue with the accounting classes. I hope it helps. That's all I wanted to say. Thanks, Clara.
Thank you, Tandazile. Much appreciated. Any question? Yes, you can speak. Mr. Daifi. Banda. You can speak. Okay, I think the hand went down. Yes. And please know that this goes with practice. And as you do, accounting is not difficult. I've been telling the students that it doesn't matter if you have done accounting in high school or not. If you follow the basic rules that we are providing you with, you will be able to pass this module. It shouldn't be a difficult module ever. That's why I say, if you are still struggling, we've got very experienced e-tutors who are available to assist you. You just have to reach out in your group sites and they will make time to come and give you time to explain this concept to you. Any questions? We still have 13 minutes. And Mr. Mhlahlan, is there anything you want to remind the students?
Student must read the announcement we posted on the module site because we communicated to students via the announcement. So it's very important for them to read the announcement because we are receiving questions already addressed via the announcement. When is the opening date of the assessment? We already addressed those questions via the assessment information folder, via the admin self-assessment they submitted to unlock all the assessments. What I'm saying, they must read the announcements and also they must go under additional resources folder to check the dates of our classes and also the topics that we are going to discuss in class. And also there is a question from Matumelo. I don't know whether Matumelo can unmute because why is the insurance expense debited when it was already prepaid? Shouldn't it decrease or it was already paid? I don't understand. Don't expenses decreases on the credit side? It was the first one of insurance prepaid.
Okay, I'll move to that.
I'm not sure whether Matumelo is referring to the first one. Or maybe she's referring to the adjusting journal entry. I'm not sure which journal she is referring to. Because there is closing journal entry, adjusting journal entry, and the first one, which is the the journal entry on the day the transaction took place, where we debited our insurance and credited bank. I'm not sure which journal she's referring to.
Matumelo, you can unmute yourself so we can make sure that you are not left behind. Okay, maybe this student is happy with their questions, with the previous response. And please know that this example is already on your study unit 6. And you should go back to the study unit 6 and practice these questions. And if you still have not cleared, you can post in your e-tutor sites and they will assist you. And please know that if your e-tutor is not helping you or responding within 48 hours, kindly send us an email to FAC at UNISA, FAC1502 at UNISA.ac.za, our mailbox, and we will escalate the issue. So there's someone was asking, what does the O stands for? Owner's equity stands for owner's equity. Is your equity from the basic accounting equation. If you go to our first class and second class, we have there to have explained this as well. The OE oil, yes. I is for income, yes. And maybe we should type it for you here. Someone can type the abbreviations for us so that we are all on the same page. And please know that if you master this, no accounting question will ever, even going forward to your other module, accounting module, second year, third year, until that. These are the basics of accounting. Once you master this, there's no accounting question will trick you, because this everything you're going to be doing from now on will depend on your understanding of this basics that we are doing for FAC 1502. And yeah, and we will see you. And if you've got any questions, you are welcome to post them. If there's any more hands, or Tandisi, I think it's the old hand. Any questions?
And I want to add something. Hey, Clara.
Yes, you can speak.
I'm saying when the student come to this online discussion class, at least they must do 50% of the work so that they can leave the class with 100% of the knowledge by asking questions, listening to what we are saying, and it will add value to them, and they will leave the class with 100% knowledge. And they must apply the principle. They must know how to apply the principle. They must understand the principles. And they must know how to apply the principle in different circumstances, because what I'm saying, because the questions in the assessment will not be the questions from the study units, but they will address the same principle. If you're asking about prepaid expenses, it will address the same principles we did today in class. They must not worry. They must just understand the principle. If they are struggling, they must send questions to their e-tutors. Then they will be fine. I think in assessment too, it's not a difficult assessment. It's just study unit 1 to 10. It's not difficult. They must just sit down, they must understand the principle and ask questions if they're struggling with the principles. And we'll see them on. It's on Friday when discussing study unit 7.
Yes. So thank you, everyone. And if we have no more questions, let's meet again, same time on Friday, 6 until 8 p.m. Thank you. We'll share the recording. Bye.
Bye.
Recording with the presentation.
Again?
With the presentation also.